Good morning. It's Harvey Jackson, Sea Green Marketing. Just going to go through the some of the implications of this lockout that's happening with the rails in Canada. Um, so this is the first time ever that both are on strike, and from what I've read so far, they're both locked out as of right now. You can see that there's a fair bit of implications here when you look back at this, and you got 279 million dollars worth of goods getting moved back in 2022. So and there's likely to be maybe a little bit more as dollar values on some of these goods have done nothing but increase in our inflationary market that we have in Canada. Um, and if we look at what the uh, our GDP has done, and we've got a little bit of growth from one year to the next at 1.1%. But and this is probably a reason why we're talking about decreasing or reducing interest rates, but may not have to do anything with the economy if we can squeeze the economy and take some of these um, growth out. With our rails going on strike. Another issue that I see here is we've got this coalition between the NDP and Liberals, and we've got one of these parties, the minority of NDP, part of the coalition is actually standing in and not wanting any interference. And I guess he really doesn't care about the economy. And I hope I think I mentioned this to a couple of my uh, coworkers as well. This strike, if it could create a fracture with NDP and Liberals do step in, it could create an easier way to maybe get an election to get started here sooner than later. So Pro Farmer Tour actually has increase in yield in a lot of areas in Illinois and corn and soybeans and Iowa as well in some areas. But the areas of concern are, I'm going to say, in the north areas here where yields were impacted by heavier rains earlier in the spring. Um, so if we just look at the markets as I took the snapshot here, you can see that canola is down, rapeseed's down, soybean oil is just basically flat, palm oil is up a little bit, crude oil is up a little wee bit as well. Soybeans down 8 to 7.5, and your wheats are basically flat, and corn are down a penny as well. So if you look at canola and how it's built a basic floor here, and trying to get above the 10-day moving average, which we haven't succeeded yet. What I'm watching for is this possible move up on your slow stochastics for a a possible buy-in. And I think I've talked about that before, but you would be looking at, where it crosses over and goes up. And if you look at that, that would be a buy. And then when it breaks down, it's a sell. So in that case, it doesn't go very far, but you need this to get below this 20% on the slow stochastics, and you could use these waves as a possible entry point and exit point. But I'm just looking for it as a positive sign on technicals. Rapeseed breaking below the 61.8 a few days ago, but now trading in the range between the above the 61.8 is somewhat positive. Rapeseed oil in it needs to get all the way up to 78.6 before I can actually say that there's maybe some bullish signals, and then above that would probably be at this level in here. So you get to 40, and then you need to get to above 40 cents a pound, and you need to get to 41 cents a pound. But you do see this technical where it looks like it could possibly go up, but then you see all kinds of fakes that always happen here as well, right? So just keep that in mind. It's these technical indicators are not bulletproof for entry and exit strategies. It's just an indication with other things that I'm looking at. So palm oil actually had a pretty good leg up and above the support line, which is good because it was trading below it for quite a bit here. So soybeans not wanting to trade above that 10-day moving average, and needs to do that and then get another leg up higher before it can be technically supportive for the prices to go up here. Crude oil not supporting the veg oil complex, which tends to be good for the economy, on the whole, but when you're growing products that are actually got some related values, it's not so good. Corn and soybeans. Here's corn having a hard time to get and remain above that 10-day moving average. But we've created a floor way down here and need to get above that $4. I think that's a magical number. And then, again, you have to get into some beating some other highs that or uh, lower highs that you've made before. So it's just a grind. And here you got your wheat doing the exact same thing, but we've got a leg down that took us away from that 10-day moving average. And we're probably could put some other stochastics in here and then see how that's actually going to measure. But I'll maybe do that for tomorrow. So milling wheat broke through the 78.6 on this longer term trend, and we're needing to stick a support way down in here, which is, we're not getting support from the European milling wheat complex at all. Hard red winter support at the bottom and trading right at that 10-day moving average as well. Next report is actually August 28th. StatsCan is going to give us near infrared imagery and yield estimates back in July when the plants were most robust and probably looked the best across the prairie provinces. And I am somewhat expecting a increase in estimations of yield from StatsCan, which would very likely put some more pressure on the Canadian price market.